Hey there, this is Dan from Hill Country Chocolate, and this is a little bit of an unusual video because normally you see me in a chef's coat and we're talking about how to make some delicious chocolate. And today I'm joining you from my other office at Rocket Tools where I run a lot of our other businesses. And I've had quite a few questions about what's happening in the cocoa market. Now, many of you, your only kind of indication of how you enjoy chocolate is what you purchase at the store. It could be a Snicker bar, it could be one of our chocolates at Hill Country Chocolate. But in most cases, you're not maybe aware of what's happening in the world related to cacao or cocoa. But in the last 5 months, there's been a doubling in the overall cost, and it's sent shivers through the market because people are starting to wonder what's happening to the cocoa market. So I've had quite a few questions. People have emailed me, and particularly people that are investing in the market. And I'm not here to talk about investing. I'm here to talk about what's happening with cacao and what we can expect maybe in the next couple of years related to cocoa prices, and maybe a little bit about what we're doing to help mitigate that. But it is a little bit of an unusual time for cacao. So we're going to jump over to my screen and I'm going to walk you through just a few charts because I think they're very compelling. So this is an example of what's happening in the cacao prices. And you can see that cocoa is actually trading today double what it was even 5 months ago. And just to give you and put that in perspective, it's about $7,000 a metric ton. That's the highest price that's ever been traded for cocoa. So it is significantly higher than what people anticipated. And it's created a lot of shivers in the market, kind of what's happening? What are we going to do to be able to supply the world with chocolate? Now, before we go too far, I want to let you know that cocoa futures do vary. So if you look at seasonal variations, it's not uncommon actually in March to have a little bit of a peak. But this peak is definitely not normal. This is certainly something that is way out of the ordinary for cacao. So what I'm going to try to do is show you a little bit of the reasons why it's happening, and maybe some things you can do to help mitigate that, particularly if you're in the cocoa business like we are. I really enjoyed this article from Cub's Den. I think Elaine Cub in this on her website, Progressive Farmer, this area here, it's got some great information about the commodity markets and the way that things are traded in that particular area. But specifically, what I want to do is pull one of the charts from her great article and kind of walk you through a little bit of what we're seeing. So the first thing, when we talk about trading cacao, many people have come to me and said, well, Dan, is it like Bitcoin? Is it just speculation? Well, sort of and sort of not. Bitcoin, as you know, is almost an electronic currency. But in the cacao market or in cocoa, you have to physically deliver the product. So if you buy a futures contract or a commodity contract on cacao, you have to actually physically deliver it. Now, there's a couple of markets. There's the Chicago Mercantile Exchange and there's the Intercontinental Exchange, and they do settle a little bit differently. One of them electronically settles and one of them actually physically settles, meaning you have to actually show up with the cacao at a given port on a certain day to settle that contract. So there's a little bit of difference, but at the end of the day, this is a physical product. It actually has to be grown, it has to be processed, it has to be shipped to the end consumer. So you do have to have a physical product here. Now, here's where, as a Texan, it really falls close to home, because one of the biggest challenges in the cacao market is that you're going to hear this word, thinly traded, meaning that there's not a lot of people trading it and there's not a lot of contracts, and it's a lot of big producers who control a lot of the cacao, and so they're trading a very few pieces of overall paper, if you will. That'll kind of date me just a little bit. And as a Texan, I will tell you that feeder cattle kind of fall into that ballpark. That's what we see a lot in cattle prices. And I will tell you, it's not been good for ranchers. So often you will notice that you will hear that cattle prices are surging at the market. You'll go to the grocery store and see higher prices, but often farmers don't actually see a lot of those higher prices trickle back down. And a lot of that volatility is because of the thinly traded market, meaning that there's not a lot of people trading. So you can imagine if you were a cacao producer, if you held a cacao contract, meaning that you had bought say a commodity contract, and you needed to sell it, or if you needed to deliver it, you needed somebody to actually deliver that cacao on a port, you might find that people are not going to settle that contract without significantly raising the price. And that's actually what we're seeing in the market. I'm going to walk through that when I kind of do a summary of showing you a little bit about that. But just to put it in perspective, there's about 3 times as many people now selling as there are buying, and which means that the buyers are getting to dictate the price. And so that's actually caused quite a bit of escalation. Now, I love this chart because I'm not a commodity trader. And I'll be honest with you, I never will be, because I don't really understand the market, and there's so much speculation involved in these markets. I just don't understand it. But I will tell you that markets work better when you've got a lot of buyers and a lot of sellers. So in things like corn and crude oil, often you see a lot of stability in those markets. I mean, yes, they go up over time. And of course, we've seen West Texas intermediate crude see some amazing spikes in the last couple of years. But overall, these markets are relatively stable over time. But in very thinly traded markets like cocoa or even cattle, you can see a lot of volatility. And that's one of the reasons that you're seeing such a significant increase in cacao prices. So here's kind of some bullet points that I put together to help kind of explain this topic. So first of all, we're seeing the highest we've ever seen in cocoa. So should you be concerned? Maybe a little, because we're probably going to see higher prices. It's not going to be reflected initially or immediately within consumer prices. I'm just going to tell you, as a producer of chocolate, where we have to go purchase chocolate to put into our products, or if we have to purchase cocoa beans, we are already seeing higher prices. We've had our producers reach out to us and tell us the very next big order that you are going to place is going to cause, be significantly more expensive. Now, we've known this is coming for a while, so we've prepared here at Hill Country Chocolate. And so we've put ourselves in a pretty good position. Now, it's not the best position that we would be in. We would love to have a very stable market, but overall, I think we have done just about everything we can do to help to mitigate that. It helps because we produce our own chocolate at the factory for many of our uses directly from beans. And so we have stockpiles of beans that we can actually turn into chocolate. And we've also got contracts that we have executed previously that we can leverage now. So we can take advantage of being able to be in the market long term. But nevertheless, I'm not going to say you're going to see a $10 Snicker bar, but you certainly are probably eventually going to see some higher chocolate prices trickle down to the market. The second thing is that, remember, this is a real product. This is really a product that we actually have to deliver. This is not something that we're just trading totally in speculation. So if somebody buys a futures contract or a commodity contract related to cacao, somebody's going to actually have to deliver it. And here's where the first part of the problem started. There is a scarcity of world cocoa. Now, most of the growth in cacao over the last decade or so has been in West Africa. Yes, we get cacao from Central America and in South America, but the problem is that cacao production overall for the last decade has been relatively stable. There hasn't been a tremendous increase in the amount of output they can produce. In West Africa, though, there has been a tremendous increase in the ability to grow cacao. So it has become the biggest single source for cocoa and chocolate in the world is coming from West Africa. In the past year, because of El Nino, they've had significant rains, and those rains came at absolutely the worst time when they were just flowering the plants. That knocked the buds off, and they had a very poor cocoa crop. So that in and of itself has created the significant kind of beginning or genesis of this specific problem. The second thing is we've had a continued increase in world demand for chocolate. Now, there was a lot of speculation last year that these newer drugs, particularly drugs like Ozempic, which many people are now taking for weight loss, these weight loss drugs, that many of the areas of the world that can afford those drugs were actually also the countries that purchased a lot of chocolate. So there was a lot of speculation that could actually affect the world's consumption of chocolate in general. And overall, it really hasn't seemed to have a lot of effect. There's still a tremendous growth in people's desire to enjoy chocolate, which we obviously are part of that. We're feeding that, if you will. But so the scarcity of the product has actually driven up the prices too. So there's been continued increased demand, and you've got these weather issues, which is created a problem. The third thing is, because we've shifted much of this cacao production to West Africa, it is also an area that has a tremendous amount of political strife. And so political issues have also complicated the delivery of cacao, the production of cacao in those areas. And finally, mining has become a big issue. Mining for gold in those areas has taken out of production many of the traditional cacao farms, which has further put some pressure, particularly in the last couple of years, on cacao production out of West Africa. And then finally, we enter into this thin market issue, which I alluded to at the beginning, where when you start to put pressure on a market that's thinly traded, you don't have a lot of buyers and sellers, people are going to get squeezed. And that's exactly what we're seeing now, is this just incredible increase in prices just in the last 2 weeks related to cacao, which is all related to that speculative market of the commodity market. So what's the take-home message? What do we actually do? Well, I think you do the best you can. If you're a chocolate maker like we are, then you start to put in measures in place to be able to make sure that you can supply the needs that you have for your factory. You diversify your portfolio just as if you were an investor. So you make sure that you're producing other products, not just chocolate products. So fortunately for us, we produce gummies, and we produce jellies, and we produce brittles, and we produce toffees, and we produce other things that are not just chocolate, which will also help our overall business. If you're a consumer purchasing chocolate, I don't think you're going to see a lot of effect, particularly in the near term, just because I think it just takes a while to drift down to the consumer. At the end of the day, unfortunately, the consumers have to make up the difference for all of the speculation that we're seeing on the speculative market, and for the challenges that we're seeing in the areas of West Africa related to weather. The one thing that it tells me, though, is we have always, particularly in our business, we have always believed that chocolate needs to be ethically sourced from all over the world. Which is why in our bean to bar chocolate, we don't just purchase from Africa. We purchase from all over the world, because that particular chocolate helps to diversify to those farmers the ability to continue to grow that product for us. Because at the end of the day, we're subject to not just the weather, but we're subject to having amazing farmers that can produce this crop in very challenging areas of the world to deliver to consumers here. So I hope you found this helpful. It is a little bit nerdy for a video from the chocolate factory, but I've had a lot of questions about it, and I thought I would share it with you today. And again, if you like this content that we have here on YouTube, then like and subscribe to this channel, and we'll continue to produce it. And if you have topics that you want to see us address, then do what happened with this video here. Send me a message or an email or something at info@hillcountrychocolate.com, and we'll be happy to work on producing content for you. And until next time, thanks for joining us for this video on cocoa prices.